Welcome to TradeTheMBI.com. This is John. This report is for the 17th. Been having some issues with the workspaces that I've been saving on TradeStation, so a little bit difference maybe in the charts that you'll see here. But this is a daily. We had the turnaround of the MBI magenta crossing over yellow, bullish indication, and then of course now the crossover of green DOC here, with the shorts being cyan, moving lower. So all those suggesting the move that we've been seeing. And again, we knew that above the 23% at 42.60 was to be the long side. Perfectly correct call there. Hitting the 38%, giving it a little bit of a pullback, but it's still within a bullish configuration at this particular stage. So nothing's changed with that. Of course, we had the rate hike well anticipated, and literally the Fed not all that interested in doing much about inflation, and they think that a quarter point move with already existing, 9-10% inflation, of course their official 7.5, it just doesn't appear that that's going to damper the mood. In fact, that would actually be bullish for the market, because you're looking at negative yields to be in treasuries in that, given that inflation rate and what they're offering. So the only really place for money to be forced to is into the market, which certainly is going to create more of a speculative move, which is why we've been seeing some of the volatility, which is not unexpected. NQ, likewise, doing the same here, just above the 23%, so softer than the ES in general, but seeing the magenta moving above 25 on the NBI, that's also bullish. Now, pivot lower obviously changes the dynamic dramatically, and simple enough, again, 23% right there, 13,796 becomes that pivot area where you want to be thinking to the downside versus upside. They didn't quite get the same crossover on a DOC, simply because if it's lagging, you can see that from the shakeout here, still being significantly negative, though better than the negative 13.5 that we look at as a substantially negative spot, but moves back below the 23%, certainly going to generate weakness. And again, any pivot below 25 on MBI, looking at much lower from that configuration. From a euro standpoint, just holding even, of course. Quarter point being soft and really not indicating a strong attack makes the euro look more attractive, relatively speaking, though the euro doesn't really make much difference, simply because they're just going to deal with, like the Russian default net. Most likely the ECB will just buy up the bonds. They'll make new ones that really don't have a market, but they'll buy themselves, and they just keep rolling that over ad infinitum. From a gold standpoint, so we'd filled positive extremes, and lo and behold, as soon as you fill those positive extremes, a little bit of a downdraft from it, and then bounce right back above. So not unexpected, because obviously inflation is going to continue, and the real question then becomes, with Russia technically out of the gold market, that you actually have a limited supply. Will that be more bullish? We're going to see. It theoretically should be, given the deterioration in dollar value. Oil, and of course, your what they call black gold, did the same thing, filled positive extremes, coming all the way back. It's right about here. A little bit further it could go, but not surprised to see a little bit of a bounce back. And of course, that's going to ebb and flow based on conditions with Ukraine, Iran deal, whether or not Venezuela is going to supply oil, and a lot of this stuff is down the road, so not having a huge impact, because we're still at the $100 barrel. When we got ridiculously at the 130 range, that was even more problematic. But the longer this protracts, theoretically, they might be able to come up with solutions to the supply issues, but more likely it's going to be an economic activity situation where people start reducing their economic activity, and that will decrease consumption and therefore increase inventories. I think we saw the beginnings of that. So it was increase in inventory, and that would have more of a significant role probably than the pumping, since you're not going to see anything from a domestic side on the pump situation as far as more drilling. Treasuries, of course, those broke out to new lows, dipped down even lower. Looks to see a comeback for a small part, just because people seeking safety, they're willing to take the negative yield and then put themselves in the risk assets, which that's going to be the play back and forth, and that will vary the kind of jumps we see, people moving risk on, risk off. From a Bitcoin standpoint, for its daily, this gives you everything you need to know right there. We had that massive move back down and pop back up. 39 range was where we had those previous markers to the 34, and those were previous positive extreme levels that we kind of hung between, and still hovering around that as we're still in a bullish configuration with it at this particular stage. Kind of flat though on a DOC with the orange rising, so we could see some softness right there, and it's right at the 50%, which is 40,782. So right there at it, and I think that from an intraday standpoint, we can look at it intraday. It's going to be easier to see weakness spreads develop within that set of 60-minute chart. I actually did one that's even down to like 250 ticks, because your volume obviously is much lower in this futures setup, but worth looking at. From a 50K standpoint, so we had the buy move came through there, we retraced it 50%, and buy again, so that's what you would call your A, B, C move. Looking to do its D and E. We'll see how that plays out. Right now, a little bit of a weak spot, coming off the DOC at the same time, breakdown of magenta under yellow. So all those combinations work in tandem. And I did have a question about the MBI when it comes to the blue-gray configuration. I like to look at those particularly when you see a move where they break out into the higher range, and effectively it doesn't really end until you get a reset below the 10, which becomes sort of that transitionary spot. And then of course we look for the blue moving over the gray when you're in a dip and magenta pops over. That's usually the turnaround point. We can see it kind of corresponds quite nicely. So right there it was slightly under for the blue and then blue X, and then right over, and that led to the up move. And of course always looking to at that DOC whether or not I've got orange falling, in this particular case below that 7.5 range, and that's also extremely, it's usually where I'm looking to cover or turn around buy, depending on whether or not we've got continued weakness. But coming off of a peak move, that gives you the opportunity to attack a little earlier and have a pretty clear idea of when it's time to take some off that particular stage for the bounce back. So it's pretty clean when you look at it from that standpoint. The green also serves a similar function, particularly when you get the crossover elements of the white MBI coming down from below. From a 5K, well, yeah, we had the nice run up, perfect, very clean, and then the occasional sellbacks, which those are where the white leads, and then boom, once the magenta takes over, get the secondary rise, and rinse and repeat below the 33, comes back down, turnaround move, magenta coming over, the blue crossing the D-red, another ride up, and just continue to rinse and repeat. And then we finally got a much bigger series of MBI whites leading and hovering around that 25 range instead of getting above 33. When it dips back below, boom, attack. That's an expectation for the 0%. That wasn't that far to get to at the beginning of it, but stayed in weakness mode. Pretty much you had one attempt right here that popped up above 25 as well as 33. White was pretty strong, but you couldn't get green over cyan at that particular stage on the DOC, and literally rolled back over. It took a little while because you can see it hung up back and forth above the 25 and that until it finally broke there, and that led to a pretty strong cascade, which means it wiped out gains, went negative, and then what did they do? Just reversed it. And that's that flip around move that very effective intraday, because you clear out all of the shorts, you reduce the long and short gamma, and then they can flip back. And so this again becomes options situation with 1 day left. Everyone's trying to take advantage of whatever premium they can develop from the implied volatility in that, which can actually make a position that's close to what should be net underwater, but because of the implied volatility being so dramatic, you get enough time excess premium in there, and it actually can turn out to make some options that are, what I might call on the edge profitable. So I never object to volatility. I think that when we're able to see it as clearly as we can, it's not really much of a factor. We've been in a weak spurt right here, pre-market, and all that's done is still positive extremes. How beautiful is that? What was the low there? 43.1950 and 20 and a quarter. And since I'm always looking for about 80% of that move, more than fills it. Love it. Clean and simple. As always though, anything relevant, new, I will put on the Skype chat. And I'll expand on some of these details as it relates to blue crossovers, the elements of when you're in the particular zone, particularly when it's an up move, and I'm looking for it to stay within that 25 to 0 range. When it dips below, sometimes you get that turnover situation, sort of like right here was the potential, but then it pulled back out of it, and then right here as it crossed over and broke down, you can see that we dipped into this more uncertain phase where it's just constantly fading. All good stuff. As always though, trade well. We'll talk to you later.